discussed on Talkin Money with Jeff Tarbell is believed to be from reliable sources. However, no responsibility is assumed for inaccuracies. No statement made on this broadcast should be construed as a specific recommendation of a particular investment product. Views expressed are those of the speakers and do not necessarily represent those of CBS Radio. Use only as directed.
Smiles, everyone. Smiles. And prepare yourself for...
Show me the money!
Ladies and gentlemen, the radio broadcast experience designed to keep your wallet in top condition. It's Talkin Money with Jeff Tarbell.
Talkin Money. Talkin Money. More money, more money, more money.
And now entering the studio, your guru for fiscal fitness, Jeff Tarbell.
Right, how you doing?
Good morning.
Welcome back. Another brilliant edition. That'll be after we leave.
Exactly.
I'm sure the next group will be brilliant. Don't count on us. We're just gonna moderately get through the day.
Yes.
Are you wearing pink or is that just me? And I'm not against pink.
It's fuchsia.
It's the mere fact that you know that word. Chris is wearing red. Now, red's a man's color. No fuchsia in there, right, Chris?
Chicks dig it.
Ever.
Not ever. Do you own anything in fuchsia, Chris?
I don't even know what fuchsia is.
It's that
color.
Although I guess your Boston hat's got a little red on the bill. It's not fuchsia. It's from this end. It's got a little fuchsia into it. How you doing?
Doing good.
I have before we get into go ahead with your rant. Then I got two Chris Verlato only quiz questions for him today.
Wow.
Two.
Just to embarrass me to make me look like
no. These are well. That's fairly simple to do. That's a given. But these are NFL related, so I'm figuring you might have a swinging shot at them. But anyway, what's happening in your world there?
Well, it's kind of weird coming in on a Saturday morning and not having soccer on. I kind of get the shakes a little bit. But
what happened to soccer?
It's the international break, so all the
siesta time.
All the international teams are getting together. The U.S. played last night. They lost to Costa Rica.
Okay.
But the big game is this Tuesday, U.S. versus Mexico. This is Red Sox, Yankees. This is Bears, Green Bay Packers. This is every rivalry in the United States held up into one against Mexico. Come on down to Alley Cats, 20th and O Street. There's probably going to be like 200 people rooting for U.S., some rooting for Mexico. We won't hold it against you, but it's going to be a good time, great time.
This is Sunday?
Tuesday.
Oh, Tuesday.
Tuesday, 5 o'clock,
okay,
U.S. versus Mexico.
They're not going to compete with the NFL. I thought you had slipped there. Okay.
If they played on a Sunday night, it would make me... I'd have to have like 2-3 TVs.
Two TVs going? Okay, are you ready?
But it's going to be a great time.
You ready for your quiz question?
Let's see it.
Okay, this is the NFL's most unstable fan base. Okay, this is a ranking of what they call the volatility index from people who post on Twitter. So they're looking for like unstable comments. My team sucks, or whatever. So
unstable, dangerous, or just changing viewpoints rapidly?
They probably have a number of
because dangerous might be 70 miles to the west of us.
Well, so they ranked them. How fans of NFL teams ranked on a volatility index from unstable to stable based on Twitter mentions. So you have number 1 to number 32. So who do you think is the most unstable team based on Twitter in the NFL?
Have to go with the Raiders.
You have to go with the Raiders. That was a given. Now, do you want to guess who is the most? I guess it'd be considered the most stable then, so they would be the last on the list.
The most stable, I would say maybe the Green Bay Packers.
Green Bay was number 26 of the 32.
I'm trying to think of people that just love their team no matter what.
Yeah, just think of just massive amount of money spent on their facility.
New York Giants.
Or
Dallas Cowboys.
Okay.
Yeah, Dallas Cowboys.
Really?
Yeah, and the Giants were 20.
I wouldn't think that about Dallas, but...
So here's your list of unstable in order, and Oakland was probably 1, 2, and 3. But Oakland, Pittsburgh, this one gets me. New England, unstable.
Oh, New England people are never happy.
Okay, Detroit, New Orleans, Seattle, Chicago, Carolina, Miami, and Minnesota. Your top 10. San Francisco just out of the top 10 at 13, and this is in terms of instability.
How do they go by that? I'm still trying to understand that.
I'll give this to you so you can read it, because I can't. There's a lot of small print. You can read it through the break, and you can educate us on what is considered unstable. So I thought that was a fairly interesting we'll let Chris read through that, and he can give us the what they've come up with. Here's another fun fact, because the the Niners are playing tomorrow, playing Green Bay live in San Francisco. I will actually be at that game. I never go to a pro football game because why? The big screen TV and a clean bathroom and cold beer are there. I mean, what else do I need to go for? But Chris, how much did Nnamdi Asomugha offer running back Anthony Dixon in exchange for his jersey number 24, which is what Asomugha wore in Philadelphia? He wanted it, and so he offered this guy, and he turned it down.
$24,000.
$24,000 is right, and he said, "Now for $24,000, I'll give you any number you want. Just give me a question mark. I don't care." $24,000 is like 24 years worth of income for me. I mean, I that's a long time. So there's your obscure football news. Chris will figure out what actually leads to the instability factor. Although I think maybe when you show up at a Raiders game and you're wearing some kind of costume and stuff, but you see that at a lot of games now. That's not really new to the Raiders. So we'll see.
Have you ever been to a Raiders game, sit in the black hole?
No.
It's interesting.
And I have not.
That's all I can say.
That's interesting. I'm going to go there wearing like a Dallas shirt.
Yeah, good idea.
I want to just get the crap kicked out of me all in one time. I don't want to wait for anybody else. So we got phone numbers and all kinds of stuff open up today. 339-1140. 1-800-920-1140. You can text us at 44-1140. Like the 530 is already jumping on John's fuchsia shirt. We'll let John read that after the break.
Leave me alone.
Leave me alone. He's got fuchsia, and it matches his eyes. He's got fuchsia eyes. Maybe those aren't real eyes. Those are implants. You got it figured out in there, Chris?
I think so. So they're taking reactions of people after a win or a loss.
Okay.
So the more hate that you do during a loss, and the more, I'm guessing, how they difference from what you say during the win. So like the Raiders fans hate more after they lost than they like when they win.
Okay.
So that kind of makes sense. Because the one that I didn't get was Seattle, because they're like one of the most loyal fan bases.
Yeah.
But that I could see that they would go crazy after a loss.
Interesting. The one thing about we're off the subject. One thing about Seattle that still impresses me this day is that when Marshawn Lynch was that in the playoffs, Chris? When Marshawn Lynch?
Yeah, it was against New Orleans. That was when they had. I think they had a losing record. I think they were 7-9 that year, but the West was so pathetic that they actually got a playoff spot, and they hosted it because they were the West champions.
Yeah.
And they totally destroyed New Orleans.
Yeah, so Marshawn Lynch broke for a touchdown in there, and it caused it registered on the Richter scale as
the crowd reaction.
Yeah, the crowd reaction, just the shake registered on the Richter scale as a minor earthquake. Now that's a hell of a game. Just like the Granite Bay game.
That's what I said. Just like the game last night. Huh?
Yeah. So we lived near Granite Bay High School. Walked over to watch the game last night. I have not seen that many people at a high school football game, maybe ever. Certainly in a long, long time. I mean, like bigger than a homecoming event. It was ridiculously packed when they played Folsom last night, and Folsom kicked the crap out of them. I mean, there's just no question about it. Folsom, and I don't think either team played particularly well, but Folsom put a beating on them. So. It was a fun game, and so great experience. I have 3 daughters that were all there, and I'll be honest, I went to Sac State. Sac State didn't have that many people at a game in football game. Of course, I didn't go to one, but I mean, it was semi small college-ish. It was pretty fun. So a lot of good football teams here locally. So anyway, that's my football speech for this morning. Sum total of everything I know about sports right there.
There's a lot of football going on this weekend.
There's a lot of football going on this weekend. We've got some quiz questions to do today. We got some things to give away. First hour, we're going to kind of handle some of our mortgage-related and some of the financial stuff. Hour number 2, I actually have to step out. John has got a couple of guests coming in. You're going to handle hour 2 or 2. Are you guys going to do some Obamacare?
We're going to talk, a little Obamacare.
Okay, so how that's going to affect?
The education, what it's going to do, how it affects, what it is, kind of nuts and bolts.
This is. I'll get into some of the. This was a very interesting week in the market, but I'll talk about. This caught my eye. I don't know if did you catch this about the restaurants. So what happens when you go to a restaurant and there's 8 of you?
You wait.
You do. But what else do they do with your bill?
They tip. They automatic the tip.
Yeah, they mandatory tip, which is generally 15 to 20%. In fact, most restaurants have a policy.
18, right?
Olive Garden, Texas Roadhouse, places like that. They usually put an 18% tip on a bill for party of 8 or more. Well, when you go to your next party, look around on your bill. I bet you it is not on there anymore. So the IRS has come out, and I didn't know this because you're starting to see some changes, but the IRS has come out and said, hey, if you're going to mandatorily put a tip on someone's bill, it's not really an option. It's part of the bill. Then we're going to consider that a service charge or part of the bill, and we're going to consider that to be ordinary income. And therefore, you're going to have to, if you're giving that to your waitresses or waiters, you're going to have to do withholding on it, include it in their W-2, and pay the tax and blah blah blah. So if you all want to do that, that's fine, but it's included in your wages. And so most of the restaurants have looked at the math and said, "Oh, forget that. We're not doing that." So they're going to take it. They're going to take it off there entirely. But don't I have it wrong? And maybe if you're a waiter or waitress or you own a restaurant, maybe you could text me or call me 339-1140 or text me at 44-1140. I thought now that a restaurant was mandatorily giving you an allocation for your tips and putting it on your W-2. So I thought they were already having to report that. And so, because don't you remember all the conversation, like I said, well, if you don't tip your waitress, they're going to assume you're going to tip them anyway, and they're going to make them pay the tax on it. I thought there was some changeover, and it's driving me nuts. I can't. So if you know the answer to that, 339-1140, I'd love to hear from you, because I know that there was some sort of a change that an employer was required to do something with your tips and taxes. And my only comment to those of you who are, serving and getting tip income, and it doesn't necessarily matter where I guess you can get tip income from anywhere. That here's the downside to getting tip income and not reporting it. The upside is it saves you your taxes, and although you're supposed to report what you earn. I'll avoid that discussion for the moment. But it also gives us in the lending industry an incomplete picture of what you really make. So if you're only getting W-2'd or payrolled for $7.50 an hour, and you're working there, 40, 50 hours a week, and we know darn well, John and I both know, everybody knows, you're not working there for $7.50 an hour if you've been there a while. If you just started at a fast food place, yeah, you all probably are. It's no problem. But if you're working in a restaurant and you're a good professional waitress, and that is what you're doing is living, and you are probably making 3 times in tips what you're making in hourly. And yet you come to look for financing anything, automobile, car, whatever. You look at your W-2 and it says, you made $20,000 all last year, and yet I know you got $30,000 in your account. I know you didn't. I mean, you've got money.
How do you do that?
Yeah. So there is a downside, to, and it's the same thing for self-employed. I tell them all the time. They ask me, what should I report? Well, you should report what you made. But we're going to look back 2 years and average those things out. So there is a downside. The only upside to being self-employed is to be able to write off legitimate expenses and try to keep your income in check. But the downside to that is that by writing off expenses and writing off things, we look around and say, okay, these guys don't make a lot of money, when in fact your cash flow probably really does. So anyway, interesting little ruling coming out. So if you look at your next bill for a group, probably will.
Yeah, I wonder what the effect will be on that, because sometimes you get it and it's 18% and you're thinking, well, I was going to tip more than that. Is tip included? Everybody always does it. And even if you know it, is it included? Yep, it's there. All right, here's what we pay. And a lot of times you'd pay more than that.
Well, I mean,
or if you're cheap like you might pay less than that.
I over tip. That's the only thing. I used to work in basically every job in the world that sucked, and sometimes still do, and so I'm very familiar with. I mean, I always go overboard, and my wife does the same. It's
my wife's the same way.
I mean, I had all the crappy jobs, and I know what it's like to be scraping by. I get it. Did it for a long time.
You know how many people screw you?
Yeah, I did a long time. So, but you look at the waiters and waitresses in this article. They're like, great, don't put it on there. And maybe they're like you. Maybe they're like, dude, we probably would have got 25%.
That's what I'm thinking, especially with a large party.
Yeah, but you know what happens with a large party? You're eating with Chris and his 8 family members, and they all get up and leave, and you're like, damn, I'm stuck with the bill.
Right. True point.
Yeah. So, or they just look at the bill and go, okay, it's $100 divided by 10 of us. Okay, that's $10 a piece. They all throw down their $10 and they walk out, and and the waitress doesn't get anything. So you're standing there with the bill. So I see both sides of it. But if you are, I don't remember the rule. So if you're listening and you know what the answer is, I thought that an employer had to assume some amount of tips you were getting every night, whether you got them or not, and was basically W2ing you for those. If I'm wrong or if I'm right, let me know. If you would, 339-1140. I'll give you a round table pizza if you can correct me on that or get me straightened out. 339-1140 is our number here. We're going to do, let's do this. Let's take a quick break, Chris. We're kind of blew through the first segment. When I come back, I'm going to give you a little bit of background on what happened this week. For the first time, I want to say in 3 or 4 years, the 10-year T-bill over 3%. Mortgage rates Thursday were hammered. Friday got a little better. And some interesting charts about who's doing what and how things have recovered. So we'll cover about all those things as well. Got a great article from the Fox and Hounds is a blog that I subscribe to online. We actually had those gentlemen on the radio one time. Yeah, good article about the Sacramento Arena bill being rushed through the assembly down there. Could support both sides of your argument there if you wanted to. So we'll talk about that a little bit as well. A couple phone lines open if you want to jump in today. 339-1140, 1-800-920-1140. You can text us at 441140 if you'd like. We do have a quiz question for you. We have so we're down to our last Hellwig concert series, which is when?
That's going to be September 28th. That's going to be the Greg Raleigh Band.
Oh, yeah. Greg Raleigh's good.
Greg Raleigh, September 28th at Hellwig Winery.
You know who I wanted to see Thursday night, but I couldn't get over there? I wanted to go see
Sammy Hagar.
Yeah, I wanted to see Sam.
I had tickets, and I couldn't go.
And I ran into so many people who were just dragging their rear end the next day because they're like, oh, my God, we didn't get home till midnight. And I guess he just kicked it.
Yeah, he had a lot of old school stuff. He did like 30 years of stuff. I mean, apparently it was very cool.
Yeah. When you and I, when we saw him at his restaurant opening, that was about a year ago, right?
Yeah, that was best. That was great.
Yeah, we were from here to Chris.
Exactly. That's why it was so great.
That's why it was. Yeah, that was a good. So our quiz question, and your choice, you can give a pair of tickets to the Hellwig Greg Raleigh September 28th, or we have some round table pizza, the artisan flatbread pizzas. We can send those out. Everybody who wins is also getting one of our Talkin Money beer koozies. We're sending those out as
drink
well.
Koozie.
Drink koozie. Right, you can do anything. You can do beer.
Yeah, you can do beer too.
You cannot do a McMargaret. Margaret glass will not fit in there. I can tell you that will not apply. No, I didn't try that. I just looked at it and said this isn't going to fit. I'm not going to risk spilling my good drink on this thing. So those come compliments. So what do you got? What do you got
Jeff was talking. There's a lot of reports this week, and at the end of the week, there's a little bit about employment and jobs. Mm-hmm. Read you a little something here. Several news organizations have been speculating that a week-long shutdown of this business may have skewed the August non-farm payroll numbers released on Friday. So what business, and it's
almost like an industry, right?
It's an industry itself.
Yeah.
May have skewed the payroll report.
So they had to shut the industry down?
Yeah, it was shut down for 2 weeks.
Oh.
2 weeks shutdown.
It wasn't the Bay Bridge guys because they just opened the Bay Bridge. So.
Right.
But it was an industry, not an object. Oh, interesting.
That's right. What industry is not responsible for the soft jobs report? Some say it might be.
339-1140. The key word there is soft jobs. 1-800-920-1140. You can text us at 441140. This is Talkin Money. That's Sinner, John Poderero. I'm Jeff Tarbell. That's Christopher Laud. We're going to take a quick break, and when we come right back, give away some stuff and get into some more of the week's activities. This is Talkin Money. We'll be right back with you.
Talkin Money.
Well, alrighty then. We're back to Talkin Money with Jeff Tarbell.
Yeah. How you doing? Back, Jack.
Wake up.
You talking to me?
Everybody.
Oh, I got up early today.
I did too.
Oh, what's going on? Knock that off.
Excited about the day.
Happy anniversary weekend to my good buddy Pete and his wife Elizabeth. Gonna go out and do a couple things with them this afternoon just to celebrate that. Can't believe she stayed with him more than a year, but that's her problem. We had a quiz question before the break. 339-1140. Did you get some winners in there, Chris? Okay. Did they take tickets or pizza or both? Okay. We got one each. So the one of the issues that kind of stirred the market this week a little bit was employment or lack thereof, unemployment report. And Friday, Thursday was kind of an unusual day. I mean, Thursday the market just really got hammered, and I'm trying to remember what the logic behind Thursday's run up was.
I think it was mostly that Syria, was it Wednesday or Thursday? Syria wasn't going to happen, was going to happen.
Yeah.
There was a pullback. Who's on board, who's not.
Yeah, so Thursday, rates, as far as rates go on the T-bill and things, hit the high point, 3% on the Treasury. Rates, on the 30-year fix went over 5% for the first time in a long time. Then you wake up Friday morning. So that happened, literally Thursday morning, everything's cool. Thursday night, everything's a mess. You wake up Friday morning, you're like, okay, this is either going to get uglier or it's going to get uglier. And you wake up Friday morning and boom, here comes the jobs report. And oh, by the way, see, this is the part.
Thinking it's going to be strong because it's been running up.
And this is the part that kills me because it's always underreported. Okay, so we're going to do a jobs report now for which would have been July. But first of all, we need to tell you that the jobs report we gave you for May and June, yeah, we weren't so close on those. Those were a little less than we thought. Oh, okay, so back in May and June, you had no freaking idea what was going on. So you made up some numbers, and now you've had to revise them backwards. And oh, by the way, now July's out, and they're not so good either. So, but then the unemployment rate drops. So if you can figure all this out, you are probably paying attention. But for one, the unemployment rate dropped. So if you just read that headline, you're like, oh, okay, great. Well, it dropped because a whole bunch more people just said, forget it. I'm not even looking anymore. Oh, okay, then we won't count you. Why won't we count you? Oh, you're not actively looking, so you're not really interested in a job. Oh, hell, I'm not. I just can't find one, and I finally just stopped. So anyway, the unemployment rate goes down because people quit looking, but the real raw numbers are the jobs being created was a lot less than expected. And oh, by the way, so was it in June. And oh, by the way, so was it in May. So we revised the previous 2 months down, and then July's not so good. So boom.
Everybody goes, uh-oh.
Yeah, now rates, market comes down, bond market goes up, rates come back down a little bit. So that leads us to John's quiz question. So there was an actual report.
There was a report posted by Washington Post and Bloomberg that says the pornographic film business may have skewed the payroll reports. They had a little shutdown. There was a little HIV positive somewhere, and
little HIV problem.
Yes.
So they closed that industry down for 2 weeks. So this is the part that gets me. There's enough people in the porn industry that it can actually move the needle on unemployment or unemployment.
You got directors, camera operators.
How many directors do you have in there?
Writers, editors. There's a lot of people out there, Jeff.
You got crew.
You got Verla.
Craft services.
Craft services. I am not eating the buffet at a porn film. Okay, I'm sorry. Whatever they're serving, I don't want any of it. So I envisioned the entire crew at a high-end movie, which is Verlaud with his camera and his buddy go, dude, point over there. And maybe 2 actors. That's about it. So 4 people. But you're telling me there's there's enough people in that industry that actually. So are they saying that it did impact the employment, or that we shouldn't blame that?
We shouldn't blame that.
Oh, but it
not responsible.
Not responsible.
Not responsible.
But the whole industry closed down for 2 weeks.
About 29,400 jobs.
And they're all in the Simi Valley area.
Apparently, yeah.
All SoCal. So 30,000 jobs is 30,000 jobs. They only picked up for the entire month 169,000. So that would be roughly 20%. So it could, in fact.
It's quite a few.
I guess what you would see is if you saw. Now, can you qualify for unemployment or not disability, unemployment benefits if your industry shuts down?
I would think so.
I guess if you're being paid W-2 and that's your job and you are a salaried person, or I'm not sure if they're independent contractors or they're salaried, but why not?
Yeah, what it's saying is anyone who worked on a film from August 12th to August 21st would have been counted as employed if the pay period covered August 4th to 17th. The shutdown wouldn't have had any impact, so there's some different areas of time where they're doing the count. Man,
I guess I know very little about the manufacturing of porn material.
I just saw it on a headline on Market Watch, Wall Street's Market Watch post this morning, and I thought, wow, I did not know that.
That's legitimate. I'm sure the 530 knows everything we need to know about that. So I'll wait for his tech. Okay, that's interesting. So that was we did get a couple winners to that. So we'll send one person out to the Hellwig Amphitheater Outdoor Concert Series on September 28th, and enjoy. Pablo Cruz is the 14th. It was Greg Raleigh.
That's right, Greg Raleigh Band.
Yeah, that'll be fun. Okay, some fun stuff that happened this week. I don't know if this will ever happen, but it sure happens. It sure comes up more often than not. So did you see the folks up in Siskiyou County, which is northern California, this week have voted Tuesday to move towards seceding from California and looking to form a new state with neighboring counties in California and Oregon. So the rural counties up there in the corner have had enough of everybody else, and I don't blame them.
Everybody's picking on them or what?
I don't blame them. And if you think about how things used to be and how they are, just in terms of just general life and farming and water and how people in the city look at animals and how people in the country look at animals and their food over there and their pets over here. And Siskiyou County is one of 11 counties sharing one state Senate district, which extends all the way along the Oregon border and south past Lake Tahoe. You talk about a skewed.
Wow.
So all those counties, all 11 counties, have one representative at the state level. By comparison, Los Angeles County has 15 state senators and 24 assembly members. And this is what I didn't know. We're going to get a little history today if you want. Back in 1964, the U.S. Supreme Court in Reynolds versus Sims held that legislators represent people, not trees or acres, which means that population, not geography, must rule the California legislator. And in 1966, the Senate was reapportioned under the new rules. So since 1966, it's been by where people move to. And a lot of these counties, particularly the ones that are either losing their water to us or SoCal or somebody else, or we're telling them you can't log in your community because that's how you make a living, because we like to see the trees when we go up there, or you can't hunt animals, or you can't this, or you can't that. They don't have any say to speak of. They have one person who's going to get outvoted the minute he opens his mouth up. So it'll be interesting to see. I don't know the official process of going through a secession from California. I know there's a process for becoming a non-U.S. citizen. We got that on our list of things to do. But a few of the counties up there, and including some of them in southern Oregon, want to create their own new state. That is going to screw up all the flags. We're going to have an extra look. We're going to have that could be the job for us. We could go around and put, hi, we're here to put a new star on your flag. That'll be $18. Just every flag we're going to stamp a star. 52 right there.
You thinker. Big thinker.
If rates keep going higher, I got to find myself a job. So I'm going to look into for the next. I say we go for it. We go some stars there. This I mentioned before the break. For those of you who've been following the show the last few weeks, we've had the Stop group on. We've had the SACTO, the group, the for and against the arena, have been on here and have pointed out their views. This was this is out of the Fox and Hounds, which is a weekly blog or email blog that comes out. Kathy Grimes is a CalWatchdog.com news reporter. And I got to say, as someone who is in favor of doing the arena, this still bothers me a little bit. And her article talks about the last minute kind of stuffing into a bill that nobody's going to get a chance to look at, the approval process, or expediting the approval process in the CEQA, the environmental review of the arena. It's kind of being jammed into another little bill that nobody really knew about and going to be pushed through real quick. And nobody gets to see the bill, kind of a la our current healthcare bill.
Exactly, sounds like it. And,
by the way, in order to get the unions on board with this, we're going to make sure that the building is built by the union folks only. So all the non-union contractors came out this week, and they were not too thrilled. Did you see that?
Good.
So did you see that, Chris? So Kevin Johnson had the little speech down there and talking about we're gonna hire union employees, and then one of the non-union guys grabbed the microphone and said this.
Well, the one of the deals was non-union contractors can bid on projects, but their employees have to be paid union wages and union benefits.
There goes the cost of that building a little bit. And what I want, when they originally budgeted that building, did they budget it as a union building or not? There's a big cost difference. I don't care either way. It's just that it's going to affect the number. So that's not the end of the world. There's a lot of contractors who will bid on government jobs and will pay union. Well, hey, Chris, did you say they have to pay them union wages, or they have to hire a union worker?
70% has to be union workers.
Okay.
But if you're not union, you can still get a job there, but you have to be paid union wages.
Okay,
and
that's
union benefits.
Yeah, that's what I was getting at. So, and I have a lot of contractor clients who they'll be doing some work up here on a project, and then they'll go bid on something in the Bay Area that has to be union. So the employee, if he's on that job, he's getting paid union prevalent wages and that thing. And if he comes back here and he's doing something else, it's not. So that's not that uncommon, and I'm sure they can work it out. But it does add to cost. I mean,
absolutely.
I mean, that's why schools and things are more expensive. They're paid a higher wage and more benefits. So it's just interesting. But if you haven't picked this up or had a chance to look at this, and there's a lot of discussion really around how much the city of Sacramento is really giving away, and how you value something. If you're giving away a signage spot for an electronic sign, well, what's it worth? You can say, well, today it's worth X because nobody drives by there. Tomorrow, with the arena up, it'll be X times 3 because everybody will be driving by there. So which value do you use, for giving things away? I had the same contention with the parking. If you're going to say, well, we're giving up parking revenue, okay, which parking revenue are we giving up? We're giving up the parking revenue that you're getting now during the day from 9 to 5 when everybody's down there? Okay, maybe that's not good. We need that money. Oh, you're giving up parking revenue from 5 p.m. to 9 p.m. when nobody's down there and we're going to be bringing people down there? Okay, well, you weren't getting that anyway. So don't tell me you're losing something. You're losing something we're bringing to you. Someone's bringing to you. So you can play with numbers. You can make a number sound however you want. Statistics are great because they'll always support your thesis until somebody else comes up with their own statistic.
That's right.
But so we'll see if Darrell Steinberg can get his bill pushed through. By the way, this was the same process they used for the football stadium they're doing in LA and for the 49ers new stadium. So it's not unheard of. It's not real popular with some people. So
I can see that.
Depends on which side of the bill you be on.
That's right.
We got to take another quiz question here real quick. 339-1140. 1-800-920-1140. And from the 916, they're paid what they are worth, and the union made it possible. I don't know what that means.
Yeah, so quick question. Chicago's having some challenges.
Financial challenges, yeah.
Yes, financial challenges. And they are putting up in an entity that they're basically going to lease out, put out there to bring in some cash flow.
Yeah, $2 billion they're looking for, right?
$2 billion.
So they're going to... So what's the quiz question?
The question is, what are they going to lease out in Chicago that they currently do themselves, but they're going to pull in some quick cash on that?
Yeah, so they're going to send out a public infrastructure to some private entity, raise a bunch of cash now. Of course, what happens down the road after you spend your cash?
Right.
So what public infrastructure is this Chicago going to or putting out for bid? Someone can take over and run it. 339-1140, 1-800-920-1140. I want to run that little canal with all the boats. I want to own the canal. This is Talkin' Money. We're going to be
right back, Jack.
Talkin' Money.
And we're back to Talkin' Money. And here's Jeff Tarbell.
Yeah, thank you. Welcome back. 339-1140, 1-800-920-1140, or you can text me at 441140. So the city of Chicago wants to lease something out, much like we're talking about doing with our parking structures and getting money up front. What does the city of Chicago want to lease out? Turn over to private company to run it, and they'll get about $2 billion up front. We did not get a winner just yet, but it's one of their biggest assets. 339-1140 if you know that, or you can text us at 441140. I'll either give you a pair of tickets to see the Greg Raleigh Band, September 2-8. It's like Saturday night at 6 p.m. outdoor amphitheater up at Hellwig Winery. Really nice. That'll be nice by then. Weather will be perfect. Or if you can't make it to that, I got some artisan flatbread pizza for you from Round Table. We can do that as well. So John will hold on to that for just a minute, see if we get a winner to that quiz question. We speaking of Chicago and Illinois area, we're just going over the break there. Huge article in the Wall Street Journal about Fannie Mae and Freddie Mac, and just kind of looking backwards and saying, okay, look at what we did in 2008. Look what we had to do, and everybody agrees that the moves that they made in 2008 by bringing in more money and buying up bonds and kind of the all the steps the Fed took to kind of just stop the slide in housing and bring rates down was extremely successful, maybe too successful in some aspects. But the article's going on talking about, here we are 5 years later, we still haven't kind of come to the end of this yet. We haven't finished the job, or we haven't ended the job. But I just happened to catch that. Did you catch a little map of the United States there? So if you had to guess just outright, and you said, okay, as of right now, second quarter, 2013, which market still has the highest percentage of homes that are upside down? You probably, if you don't listen to this show, would probably still think Arizona, which is not even close. Vegas would be probably number 2 on my list, and then Florida would probably be number 3, or vice versa. Yep. I'd guess those two. And yet it's Rockford, Illinois, which is not too far out of Chicago, right?
About 90 miles outside of Chicago.
Yeah, so think about that. So what's 90 miles from? So basically, San Francisco is about 90 miles from here, or we are from them, either way. So not that far out of the mainstream. Still, roughly 1/3 of all their homes in Rockford are upside down. Number 2 on the list is not Las Vegas; it's Atlanta. And I thought Atlanta, Georgia, I thought that area was doing well. And then number 3 is Vegas, and number 4 is Orlando, Florida. And I've never been to Orlando, so I don't know what the issues. Maybe a lot of condos, maybe still.
Yeah, probably.
So there's your top 4, and frankly, I would have got 1.5 out of that if you'd asked me on the list. Certainly, there's some areas down in SoCal that are still, particularly out toward the Riverside area, they're still upside down quite a bit. But you look at this map, and John and I are both looking at the same map. It's it's colored light blue and dark blue. There's not a lot of not a lot of segments that are blue, in the entire map, and blue would mean upside down. So that's good. That's good, and that's going to be helpful for us. Here is Sacramento is on this map. So is Placer County, but it's kind of in the 0 to 5% range. Although, I had an article last week that said, thank you. We had an article last week that said still. Maybe I just mentioned this internally at our own company. There's about 30% of the homeowners in the Sacramento region are still upside down a little bit. About
a little bit, okay.
Yeah, a little. So they're still not upside down a little bit. So people ask me, well, God, who would still need to refinance? And I said, well, think about. I mean, if rates keep going, the answer may be nobody. But think about all of the people that were upside down who weren't HARP approved and have been dying to refinance. And so how are they going to do it? Well, they're going to do it by values picking up. Finally, they were 110%, and they were 100, now they're 90. They're going to be able to pick their way out of that, and hopefully rates will be around reasonable when they get there. But it's also another supply of homeowners, of home sellers, excuse me.
Yes.
Because these are people that have been locked in their house who really would like to move up or down or just sideways, but haven't been able to. Don't want to screw up their credit. And don't want to come out of pocket for $10,000, $20,000, $100,000, or can't. So there's, we're seeing an interesting group if the market continues to kind of inch its way up. We'll see new people coming out that either could qualify to lower their payments down and give them some financial savings, which probably gives them more money to do something else, good for the economy, or finally say, okay, finally I can get out of this house. If I could just walk for what I owe by selling and not walking, I'd do it.
Yeah, and I think that was a big push probably just beginning of the year. A lot of that happened. Finally, values were there, and people jumped. They wanted something smaller. They wanted something bigger. They wanted
different.
Something.
I mean, where you lived 10 years ago, for the reason you bought there, in many cases, is not the same reason you need to be there now. You moved there for the schools. Your kids have moved on to a different school, or sizing. All kinds of reasons. So they've kind of been locked in, and we've artificially kind of locked down our ability to move. That's changing. And I will caution you, if you're a seller, it's changing. And right underneath our feet a little bit, things are morphing a little bit. So rates are having their impact on some people. And buyers are now saying, I'm not just going to buy that first thing that comes out and overpay for it, in my mind. I'm going to wait and see if I can find the ideal house, or I'm going to make an offer. I'm not going to offer over asking price. And so some sellers are going to get caught. They're going to get caught priced too high. And they're going to get caught with a house that maybe they thought they could get a lot more money out of than they can. So I think we're starting to see those changes a little bit. So interesting. We did get a winner. And so the city of Chicago is going to
Going to lease out their airport.
The airport.
Yeah. Their airport.
This is welcome to the Christopher Lott Airport, Chicago, Illinois. How you doing? Our landing fee here has gone up a little bit, folks.
Yes.
It's going to be just a little bit more. And by the way, if you're not a Boston fan, you cannot get off the plane. So there you go. It'll be the Christopher Lott Airport. I'm going to rename it, Chris. I'm going to lease it for you and rename it.
I did want to bring something up. We're
Please.
talking about the labor union deal.
Okay.
Okay, so I made a couple of texts and calls just to make sure I have everything right. Labor costs were assumed into the initial bid that Sacramento was making. Also, if it does go over that, any overrun is being assumed by the Sacramento Kings ownership.
Okay, so they assume, you said labor costs, but you meant union labor costs.
Union labor costs.
Yeah.
So even if it shouldn't change it's not going to change the price, no matter how much over. Let's say this does. They're saying that it's not going to because they assumed that union labor was going to be using it.
Okay.
But say it does go over, anything over what Sacramento puts into it is going to be paid off by the Sacramento Kings.
There you go. So
the Sacramento Kings ownership
group
was. They were with the city and the union.
I saw that.
All that so.
Yeah, I saw that, and that's a good political move. I mean, if I was them, I would do that. You want to get big groups behind you, and quite honestly, let's be honest, folks. The independent contractors, the guys who are not union, they're not going to come out against that. I mean, they're already on your side. They may not be happy, but they're not going to come out. They're not going to come out and fight you. Say, well, we're going to stop the building because they won't do it. That's against their own interests. So you got to get on board. As many big groups as you can, and certainly in this area, the labor or union labor would be a huge one. So I get it. I understand why they did it, and if they got it budgeted into their building, then so be it. That's good for them. I just want my seats. I don't care how you get it done. I want my seats.
Want my seats.
I'm gonna be back down on the one seat by the time, but I'm looking forward to all the new cool things that are gonna come out there. I did mention this week that rates two phenomenon this week that happened before we take the break for the hour. One, the T-bill over 3% for the first time since I want to say, was it 2010? A good couple and a half years. So it's been kind of a mental mark, and I think Friday it actually trickled back under a little bit. The other thing that you might have caught this week, which is unusual, is that mortgage rates, particularly the conforming high balance rates, were now higher than a jumbo mortgage rate. So what I'm talking about is typically when you go beyond a $417,000 loan, you become a jumbo. Well, they temporarily expanded that in our area, not for every area, up to 474. And so those rates are slightly a bit higher, but they're now higher than a true jumbo loan. A jumbo loan is a loan that doesn't have a Fannie Mae or a Freddie Mac backing to it. It's a loan by a bank or by us or somebody who is keeping that mortgage. And you ask, and those are typically have been a point to 2 points higher than a conventional loan. I mean, think about it. A conventional loan, for the most part, has Fannie Mae, Freddie Mac, the federal government backing. I mean, it's basically an implied guarantee that if you don't get your money back, we'll pay you. A conforming loan or jumbo loan doesn't have that backing. You're on your own. Now, generally, you have to put down 10 minimum, probably more like 20% to get a jumbo loan, so they're a little less risky. Mm-hmm. But the banks are killing it on the jumbo, because where does a bank get their money to make you a jumbo loan? They either get it from depositors who are getting paid nothing, or they can borrow it from some other sources, but the spread for them is huge. It's like probably 5%. I mean, the banks are making killer money on it, so they don't have to raise their rates up. They want that business. They're paying nothing to us as depositors, whoever, and getting 5 to 5.25%. Huge numbers. So the other thing I'll note is that the spread this week between a 30-year and a 15-year fixed has become back to where it used to be, very large.
Actually a spread.
It's actually a spread. And now you have to, if you can afford the 15-year fixed, you have to look at that very, very carefully, because it's almost 3/4 of a point to 7/8 of a point lower than a 30-year fixed. And that's just because the way the market's buying the bonds behind it.
Right.
So the 15-year fixed has become very, very attractive if you can get into it. For a while, it was maybe a quarter. I mean, it almost wasn't worth considering. It's a real spread now. So it's some very interesting phenomena this week. So that kind of sums up our the first segment of our mortgage-related talk today. I am going to step out. John's going to step in. John's got a couple guests coming in too. Hang around for hour 202.
Talk a little bit about Obamacare.
Is Don your guest?
Yes.
Don is on hold. He's
Don
ready
is on
to
hold.
roll.
He's ready to roll.
Don
All right.
is ready to roll. So you can get us during the hour number 2, 339-1140, 1-800-920-1140. You can text us at 44-1140. Got a couple more quiz questions coming up for you after the break. Talk a little bit about how Obamacare is going to help or hurt you, how it's going to affect you either way. The John Fodorero Show will continue. This is Talkin' Money. I'll see you next week, everybody. Be right back.
Talkin' money.
Well, alrighty then. We're back to Talkin' Money with Jeff Tarbell.
All right. Am I on? Here we are. Good morning, everyone. It's John Fodorero. I'm in for Chris. We got Chris Ferlad here. Jeff Tarbell stepped out of the studio. He's out and about. And my friend Alex here. And we have Don Ariosto on the line. He's calling in regarding Obamacare. We're going to pull him up. Hey, Don, how you doing this morning?
Good morning, John.
How are you?
Good. Thanks for having me on.
Absolutely. So we're getting started here. It's Saturday morning. We're on KHTK, Sports 1140. You can call us at 339-1140, or you can text us at 44-1140 if you have any questions. We're going to do kind of a nuts and bolts about Obamacare, what it means, how it affects you, how it might affect you. I know there's a lot of it comes about here October 1st. So before we get into that, I have my friend Alex here. We were out pouring wine last night at an event, and it's always interesting when you're pouring wine because everybody seems to like wine, and nobody really seems to know what they drink when they drink wine. It's kind of an interesting, to me it's interesting, all this, you got to drink this and I got to drink that. And, here I'm pouring some blend from Hopland, California, and it was just a blend. And they're like, well, what kind of grapes are in it? I'm like, well, would you know the difference? And I think a lot of times they don't. But the interesting thing about Alex is that he does distribute some beverages. And I think it's interesting with the arena that's going on. He knows a little bit about what's going to happen down in the Sacramento area in terms of new restaurants, what's the vibe, what's the feel, and as we kind of go through a lot of different things always, nobody really knows. So anyway, it was fun last night. We're out at Christian Brothers pouring wine for their wine and food event. Ran into Warren Smith from Sacramento Republic soccer team. He may call in, give us a little update about what's going on there. And we'll take it from there. So my friend Don Ariosto, who is a insurance provider, he is the owner and operator of CIF Insurance Agency. He's on the line. We're going to talk a little bit about Obamacare. If you have any questions regarding whether it's individual, whether it's company, feel free to give us a call. Again, at 339-1140 or 1-800-920-1140. Alex, what do you got going on?
Recovering a little bit from last night, and
all right.
There we go.
Jeff, turn us off. Sorry about that.
Now you can hear me.
There we go. So you're out at soccer this morning?
Soccer with the kids this morning.
I think a lot of people are doing that this morning. I know I'm running out to Dylan's first game after this, and you probably have 2, 3, or 4. How many kids do you have?
3. There's game number 2 is going on right now, and game number 3 is at 3 o'clock in the peak heat today.
Gotcha. So the organization you work for, we were talking about wine when we got started here. I think you were saying in California, $2.2 billion of annual booze sales?
That's correct,
That's just your organization,
That's
the
correct.
organization we work for. So a lot of people out there enjoying some different varietals.
Lots of beverages.
It was funny. I was pouring some Mum sparkling wine. It's not champagne. Tell me why. Tell me why you cannot call...
Well, it's got to be champagne. It's got to be from the Champagne region of France. Otherwise, it's sparkling wine.
So anything made in California at Mum there, everybody likes to go there, hang out, and drink champagne. They're not drinking champagne.
And just like if it says it's a Napa Valley Cabernet, it's got to be at least 75% Cabernet from Napa Valley. That they control that all very, very tightly.
Gotcha. Okay. So as we always talk about on Talkin' Money, drinking. That's just one of the things that we talk about. But outside of that, again, I talked about we have Don on the phone. Don's from CIF Insurance Agency. I know it's a big football time right now. We have a lot of football going on last night with the high schools. We have some football going on tomorrow, Monday, 2 games. Don is also a referee. I'm sure you got a game today, Don, that you have to go referee down there?
Yeah, I do. I'm out at Redlands University, and they're playing team from Texas.
Okay. What time's that game go off?
That's a 7 p.m. kickoff.
7 p.m.
Mary Hart Baylor from Texas is coming in to play University of Redlands. It's a big game.
Big game.
Both teams are nationally ranked.
Okay.
Fun.
Good. So, Don, tell us a little bit about yourself.
Well, John, we are an independent agent, and what that means is that our agency is a full-service provider of all the carriers that do sell insurance, deliver insurance in California. We provide a full service, and we have a wholesale relationship with all the carriers. I can appreciate your segue into this with some wine. I think a lot of people may need to drink some wine after they try to put their hands around this whole Obamacare, Affordable Care Act, and how it's going to affect them. They have a lot of questions. And it can be kind of stressful for families and small businesses to try to get an understanding of really what it means, how it affects them, and what their options are. So I appreciate you bringing me on today to try and put some clarity to that.
Yeah, definitely. And so I was at a golf tournament yesterday, was invited to throw a little thank you to Trevor Kern from Trevor. He's a financial planner, and we were out there at a golf tournament yesterday. And one of the guys we were playing with said, my wife comes home, she walks in the house. I get no hi, no hello until she gets a glass of wine, and then we get to talk.
We like those kind of people.
So it's interesting. But so we're here on Talkin Money. We're going to talk about Obamacare, kind of nuts and bolts. The reason we've been talking about it lately is it's coming up on October 1st. I know enough to be dangerous about it. I think most of the people out there are in the same boat. It came about. How many years ago? 3 years ago?
John, the law was passed in March of 2010. And there's been a few incremental steps, such as keeping children on their parents' health plans until age 26, preventative care covered 100% on your existing plan. But really the crux of the law, in California, the brand name in California is called Covered California. This is the Obamacare version. Every state may have their own brand name to it, but it really comes down to the Affordable Care Act, called the ACA, in California, called Covered California. And this exchange market opens for applications October the 1st, and all the effective dates, regardless of your application submission date, will be January 1st of 2014.
Okay, so you were telling me you're doing a little bit of advertising to get the word out. People out on the street. What does this mean? Does it do something for me? Doesn't it do something for me? And I'll be honest. I think a lot of people have no idea what they need to do, what they don't need to do. Obviously, the bigger picture with businesses. We've got a lot of business owners that listen in. How does this affect me? What's going to happen? So Obamacare is coming out. It was passed in March of 2010, as you said, and there's an opening time for applications. What is that application process going to be? Is it just an online thing? Is it what do they do about that?
Sure. Well, the law. One of the biggest concerns we had with all people across the country was people wanted to bring down the cost of insurance, that it was becoming unaffordable for a lot of families. So the Affordable Care Act was implemented with the intent to make insurance accessible to everyone and to bring down the cost of insurance. Now, we're still waiting to see if the cost comes down over time, so we really don't know that answer. But certainly one of the key elements to it is that everyone can purchase. No longer do we have medical underwriting for declining people that have conditions that are pre-existing. And that was one of the big problems we had with folks that had sometimes simple conditions. They wanted to buy, they wanted to insure themselves, but they were unable to acquire coverage. So no longer do we have medical underwriting. That goes away. And no longer do we have the ability, or the carriers, have the ability to rate up a policy based off conditions that are pre-existing. So effective January 1st, everyone, regardless of gender, regardless of conditions, pays the same premium for the plan they choose. Now, the process to apply, there's two markets in covered California. One of them is called the individual and family market, and the other one's called the group market, and we're familiar with that from prior years. The group market is now called SHOP. So we have SHOP and we have individual, and most folks we're talking about today, I think, are either in the small group or the individual market. The large group, which with 50 or more employees, isn't really affected right now. They delayed that mandate until 2015, and we'll see where that goes in the future. But as of 2014, the small group market, less than 50 employees, as it is today, is not required to offer benefits, health insurance, to their employees. So not a lot of changes on the small group market. But what we really see is the individual market, with about 5 to 6 million Californians coming into this new exchange covered California individual market to acquire insurance. And in the individual market, there's a couple different avenues they can go. There's the subsidy market, and then there's the off exchange called the non-subsidy market. And there's an application to apply to the IRS to see if a family is eligible for a subsidy to help them pay for their health insurance.
Okay. Let's pick up Steve here. Steve has a question on line one. Let's see what Steve's question is. Morning, Steve. How are you?
Very good. How are you doing?
Doing well, thanks.
My question is concerning, I am not interested in going to the exchange or anything. However, it says in the first year you will be paying a taxable or fee penalty of $95 or 1% of income, and it progresses as the years go by. My question is the definition of income. Is that gross income or taxable income?
A good question, Steve. That's line 4 on your tax return, called gross adjusted income. So if you choose not to participate, unfortunately the first year is a small fine, and that fine increases in year 2 and in year 3. It's 1%, as you said, in year 1. It goes to 2% year 2, and 3.5% in year 3. And the reason for that, Steve, is that they really wanted people to participate. Because without some healthy people participating in a pool of insurance risk, only those that are sick would participate. So we really need to have a balance to make the whole delivery system sustainable.
And that is that is actually understandable. I think really my question is more probably a tax question. There again, is it 1% of my gross income or adjustable income?
Adjustable, gross adjustable.
Well, you're talking two different animals there.
It's on your gross adjustable. So you're looking at
line 4.
Well, taxable? Okay, be my taxable.
Yes.
Okay, so I was confusing. You were mixing two different adjectives.
Yeah, it's on your taxable from your tax return on the line 4 there.
Yeah, so I'm not an accountant, but what we're seeing is that line 1 would be your gross income, and then any contributions you made to a Roth IRA, to a 401, to a retirement fund would be deducted from your gross, thus leading to your line 4, your gross adjustable income, and that's the number that the 1% is based off of.
So it doesn't take into account your exemptions and other deductions?
No.
That's correct.
Okay. That answers my question.
Well, very good, Steve. We appreciate you calling in. We can get you artisan pizza there. We can put you on hold, and Chris will pick that up for you. Thanks for the call.
Okay, thank you.
Hey, John, I also wanted to mention that this open enrollment period, which goes from October 1st, it actually goes longer in the first year through March 31st. If a person like Steve decides not to participate and not acquire insurance, they cannot purchase until open enrollment of 2014. And that window in 2014 narrows from October 1st to December 31st of 2014. And the reason for it, John, is that they don't want folks who decided not to participate and then may have an insurable event in, say, May or June of the year, decide to send an application in as they were trying to get health care.
Okay. All right. I'm just picking up a line here. So question here from the 916 is, okay, so I work for a company with well over 100 employees. Does this mean my job has to supply medical benefits, and does this include dental and vision?
Yeah, good question. Part of the original Affordable Care Act did mandate that employers with greater than 50 employees do provide affordable health insurance. However, about 2 months ago, they delayed that mandate till 2015.
Okay. All right, so 916, hope that helps you out there. We're here on the line with Don Ariosto from CIF Insurance Agency, and we're talking about Obamacare. We're talking about what comes into place here on October 1st. So if you have any questions, you can give us a call at 339-1140 or 1-800-920-1140. We're just talking nuts and bolts. Any questions you may have, whether you're an individual, you're a business. We have our wine guy here, unless you wanted to talk about wine, because apparently a lot of people are probably discussing this over wine in the evenings. And we're going to take a break. We're going to look at, we have a quiz question. First quiz question of the second hour is, this might be an easy one for you, but I didn't know that there was a very large bill that was printed. We're talking about U.S. dollars. So the question is, what is the largest bill ever printed by the Bureau of Engraving and Printing? What is that dollar amount? Give us a call, 339-1140. You can text us at 441140, and we're going to be right back.
Talkin' money.
Well, alrighty then. We're back to Talkin' Money with Jeff Tarbell.
All right. Good morning. This is John Fotorero, Jeff Tarbell's co-host, normally here Saturday mornings. Welcome to the show. We have a friend of mine, Alex, here. He's our wine and booze guy. We also have Don Ariosto on the line. We're talking about Obamacare, health insurance that's coming into place here. We have a few callers on hold. I'll be right with them. Don Ariosto is with CIF Insurance Agency. And easy way to find some information and get in touch with him also is www.californiaexchangeplans.com, californiaexchangeplans.com, or he can be reached at 877-840-0554. So welcome back to the show. We're going to pick up Jack here on the line. He has some questions. Morning, Jack. How are you? Welcome to the show.
Pretty good. Listen, I have a concern about the individual market. Last year, I purchased an individual plan after my company went under, and I was not eligible for COBRA, so therefore I had to buy an individual plan. I've had 4 rate increases within the last year. Premiums were increased. At the same time, deductibles were increased. I wanted to know next year, will the insurance companies continue to abuse the customers with this type of indiscretionary activity?
Good question. Don, what have you been seeing?
Hi, Jack. Don. A significant part of those rate increases were due to the fact that the carriers had to include mandated benefits. An example of this, which was very frustrating for a lot of people, was that your insurance policy now must include maternity benefits. For years we offered non-maternity plans to men, to children, to women out of the maternity age, and they, being the government, felt that was discriminatory. So those benefits plus many other benefits must be included now in plans in 2013 and moving forward. Which plan do you have? Which plan do you have, Jack?
I have a PPO plan. I want to remain anonymous with the company. But it's not the same plan that I had a year ago. It's all been modified.
Yeah.
And
you know what your deductible is?
Go ahead.
You know what your deductible is, Jack?
My deductible was $4,000. Now it's $9,000.
Okay.
That was not the same plan that I had a year ago.
Yeah, Jack. One of the biggest concerns you might be aware of now is that effective January 14th, you will be kicked off that plan. That plan does not meet the minimum required benefits with a $2,000 deductible or lower, according to the Affordable Care Act. So obviously you've seen some frustration with the rate increases. You're going to have to go into the exchange and pick a plan that has a $2,000 deductible or lower.
So you would recommend that I abolish this plan, come October 1st, get online and sign up for one of the graduated plans that are available?
Yeah, that's going to be your next step. We're here to help you with that, CaliforniaExchangePlans.com. But you're going to see a significant rate increase due to the fact your deductible is going from what we described as catastrophic coverage down to a $2,000 deductible or lower.
That's more manageable.
Well, hopefully, maybe you're eligible for a subsidy to help pay for the premium. I'm happy to help you with that as well.
Okay, thank you for your help.
Great call, Jack. Appreciate it.
Thanks.
All right, and we're going to go right into Tim. Tim has a question regarding, looks like a Cobra question. Hey, Tim, how you doing? Welcome to Talkin' Money.
Thanks. Yeah, Don, I anticipate I may be having to go on Cobra here before the end of the year. And I was wondering if I go on Cobra, does that have to, that runs, I believe, for 18 months. Does that have to expire before I can actually get on the Affordable Care Act?
Well, you'll have the option to stay on the Cobra plan or to move to individual. One of the reasons in the past why people stayed on Cobra is that they were ineligible to acquire and purchase an individual policy because they may have conditions that were pre-existing.
Okay.
As I mentioned a few minutes ago, medical underwriting goes away. So thus, you would have a qualifying event, meaning that you've lost your coverage. You have the option of going to Cobra, or you have the option to look at the individual exchange market and pick the best plan for you. If you are unemployed, you'll probably want to look at the individual market because of the subsidies you're eligible for. Subsidies are based off of income, and if a person is unemployed, they will be eligible for a significant subsidy to help them, pay for their insurance. Hope that helps you.
Okay, so if I'm laid off in December, I can choose either to take the Cobra or go with an individual plan, correct?
Absolutely, yes. Correct.
Okay.
Well, very good, Tim. Appreciate the call. And anyone out there that has questions, you can always reach Don at his company at CaliforniaExchangePlans.com or 877-840-0554. And you can always call in today. We're here live talking money. We have Don Ariasio on the line. We're going to pick up Mark from Yuba City. Morning, Mark. Welcome to Talking Money.
Good morning. Thank you.
How are you?
Good, real good.
Good. What can we talk about today?
I recently received an early retirement buyout, and but it came with it was a good buyout, but it came with no insurance. But I'm a vet, so I signed up and got VA coverage. My question is, now that I have VA coverage, which actually has been very good so far, do I have to purchase insurance through Obamacare?
Great question. VA insurance is a valid waiver, so you would not be required, would not pay a penalty if you did not purchase in the exchange. You have a valid waiver.
Well, great, because I asked them at VA a couple months ago, and they said word hadn't come down yet. They didn't know.
Yeah, all government insurance, Medi-Cal, Medicaid, VA insurance, TRICARE, other group insurance, they all are considered valid waivers. You're fine.
Now, when do you file the waiver, starting 1 October through March?
You wouldn't file. You would provide that with your return.
Oh, okay.
Yeah.
Where do you get that from?
You would show proof of credible coverage, and you would submit that with your tax return, and that would provide the IRS with a valid waiver.
So I just need to check with the VA saying, how can you provide me this proof of coverage?
Mm-hmm. The letter you want to get from the VA is called a letter of credible coverage.
Letter of credible coverage.
That's it.
All right, I appreciate it.
All right, Mark, thanks for calling in.
Thank you.
So let's backtrack a little bit. Obamacare, there's a lot of questions. Anybody has any questions, we can be reached at 339-1140 or 1-800-920-1140, or as always on a text line at 44-1140. And great questions. Appreciate them coming in. It's I'm learning as we go here. But so just to backtrack a little bit, Obamacare here in California, the Affordable Care Act was passed. We're by our president. And Don, tell us a little bit about what were some of the promises possibly that this ACA care is how it's gonna help, what it's gonna do. Give us a little feedback there.
The president and the government sold the bill on a three-stool approach. Keep your plan if you like it, keep your doctor if you like it, and the cost of health insurance would go down. There were the three legs that the bill was passed upon.
Okay. So let's see here. So we got a $2,000 or lower. You were talking about that. So if you're on one of these higher plans, now you go to the $2,000. There's some subsidies out there. How do I find out more about the plans and if I'm eligible for a subsidy?
Yeah. John, one of the biggest concerns people have, and I think one of the most key frustrating points for folks, is that a lot of people bought higher deductibles and they were very satisfied with the plan they were on. I bought a $4,000 deductible. I paid this premium. I'm comfortable with that risk at a $4,000 deductible, and I want to stay on my plan. And a lot of calls we're getting from people is, I want to keep my plan. I like the plan. The president said I could keep my plan. Well, unfortunately, that's just not true. If you're on a $4,000 deductible and you purchase the plan after March of 2010, unfortunately, you'll be kicked off your plan as of January 1st and forced into a plan with a $2,000 deductible. So that's a frustrating point, which obviously drives up premiums for folks that are paying a higher deductible premium.
Right.
Second leg of the bill was keep your doctor. All of the exchange plans are built around what we call narrow networks of doctors. Now, in the individual market, there's what's called on exchange and off exchange. The on exchange is where you get your subsidy reimbursements. And if you go into that market, the individual subsidy market, you may not be able to keep your doctor because your doctor may not want to participate in the lower reimbursement rates in the subsidy market. You can still buy a plan in the individual market in Covered California outside of the subsidy market. And in that market, there'll be full network of doctors.
Okay.
That's an important point. And the third point was, the cost of insurance should go down. Well, John, we just don't know yet. I mean, time will tell. There's a lot of concerns out there from a lot of people that the bill isn't addressing the true price tag of insurance, but really nobody knows yet. Now, to answer your question about how am I eligible for a subsidy, do I get a subsidy from the government to help offset my premiums? There's a two-step application. The first application is an IRS application, which, we can help you with. We'll submit that. It's based off of a very simple formula: household income and number of people in your home. You submit that prior to picking a plan. We get the feedback from the IRS. It says this person is eligible for this amount per month, and then they apply those credit dollars towards picking a plan. Now, important to note, John, that the subscriber, the member who's buying insurance, does not pay the full price. They pay the after-subsidy premium. So, for example, if an individual chose a plan with a premium of $200 and they were eligible for a subsidy of $125 per month, they would pay the net premium of $75, not the full premium.
Okay, so you keep talking about the IRS as far as part of this. So is each individual going to have to file something with their tax return this coming year?
That's correct, John.
Each individual, okay.
The governing body of the ACA.
So whether this has anything to do with you or not, meaning, you're a wine rep and you have full coverage, you're still going to have something on your tax return that you're going to check a box or what have you on?
Check a box and provide proof of credible coverage.
Oh, wow. Okay, so each individual is providing proof of this credible coverage. Okay.
Yes.
So everybody needs to be aware of that. We're live here. We're talking with Don Ariosto. He is with the California Insurance Finder Agency. He can be reached at www.californiaexchangeplans.com for the simplest of questions for an individual, for the difficult ones regarding companies. Do you have a size limit, Don, as far as what your company offers to size of a company out there, 50 employees, 100 employees?
We specialize in small businesses ranging from 2 employees up to 50, a few larger than 50, but our niche market is 2 to 50.
Okay, perfect. And information... Go ahead.
I'm sorry. We're a full-service agency. A lot of our small groups rely on us for all of their HR outsourcing, from processing in new employees to sending out COBRA to administering their benefits, claims assistance, rather than have the employees call the carriers, lay on hold, prove who they are. It's a very frustrating, time-consuming process. They call our agency, one-to-one service. And important to know, John, it's the exact same price for the individual policies and the small group policies direct to our agency. We have a wholesale relationship and do not charge broker fees for our services.
Okay, great information. So let's check with Chris. Chris, did we get an answer to our first quiz question of the day? We did, okay. So the quiz question first was, what is the largest bill ever printed? And I've never had one of these in my wallet. I'd like to have one, at least just floating around. I know Chris has a couple in his wallet. But it was the $100,000 gold certificate. Apparently these were never put into circulation, were only used for transactions between Federal Reserves. And Woodrow Wilson was the president featured on that bill. I'm pretty sure Alex Clausen knew that because this guy knows everything. Did you know that?
Actually, I did not. I'm sorry.
Okay.
I should have opened my wallet and looked at the one I've got there.
There you go. So we're talking about Obamacare. We're going to take a break here. We're going to throw out our second quiz question. We're going to come back with Don Ariosto from the California Insurance Finder Insurance Agency. And any questions regarding Obamacare, you can reach us at 339-1140 or 1-800-920-1140. Our last quiz question of the day has to do with napping. I'm pretty sure Don's a napper. Actually, But question of the day. This is regarding the field guide to the perfect nap out of the Wall Street Journal. What is the ideal power nap amount of time in minutes? How many minutes is the ideal nap time? Give us a call, 339-1140, 1-800-920-1140, or text us as always, 44-1140, and we're going to be right back.
And the action continues on Talkin' Money with Jeff Tarbell.
All right. Welcome back. Here we are, the second hour, the third segment. We're here live. This is John Fotorero. I have Alex Clausen here, my good buddy. We also have Don Ariosto with California Insurance Finder. We're talking about Obamacare. Any basic nuts and bolts questions to the more complicated questions. If we don't know them, we'll find them for you. But we know most of the answers. So I believe we had a couple. Our last question was, what is the ideal time of a power nap? How long? And we had a few. We had a text winner. We also may have had a call in there with Chris. So they'll go out some artisan pizzas. We appreciate the calls today. We have one holder online here, so we'll get with Pam here in just a second. Just doing a recap on Obamacare, when it started, the October 1st number that's coming up. Any questions, again, feel free to give us a call at 339-1140, 1-800-920-1140. Let's pick up Pam here on the line. Morning, Pam. How are you?
I'm fine, thanks. Hey, I'm really confused about Obamacare, and one of the things you just said was we're going to have to provide proof that we have insurance come this tax year, right?
Correct.
So if I work for the state of California, am I going to get documentation from them, or are they just going to provide the documentation. How will I do that?
Are you with us, Don?
Yes, I'm here.
Okay.
Yeah, your employer is required to provide you proof that you are covered. And the letter is called a letter of credible coverage.
So, Don, would you say if we're here at Sacramento area with a lot of state workers, as they are throughout the state, is this something that you think they're going to do automatically, like you get your W-2 in the mail? Are you going to get this in the mail? Is it something you're going to have to request?
No, it's mandated that the employers, including government employees, do get a letter of credible coverage from their employer.
Oh, good. So they'll give it to us without asking.
Correct. And I believe also, too, government employees are exempted from the mandate since they have coverage through a government agency.
Okay, and hey, I have another question.
Sure.
Okay, so regarding, my son who's 23 and he has a part-time job, is he going to have to pay Obamacare?
Okay, great question. The issue is, do you cover him on your policy at present?
Well, no. Here's the other. He was having insurance, but then he just got a letter saying he's been, I guess because he graduated from college in May and maybe he doesn't have insurance because he's not a full-time student anymore. So, no, I don't.
Well, in a way, that's good because he would be eligible, being a part-time worker, for a significant subsidy in the exchange market. If you had included him on your plan, obviously he wouldn't need coverage. But if you claimed him as a dependent, then his income would be your income would be part of the household income as well as his. Being that he's not included on your plan, it would probably be best for you to put him into the exchange market where he'll get a significant subsidy to offset his premium.
So does that mean during the open enrollment between October and, what did you say it was, October and March?
Right. The first year open enrollment goes October 1st through March 31st of 2014. If you apply between October and December 31st, your effective date is January 1 of 2014. If you apply in 2014, your effective date is the first of the following month.
Okay, one other thing, I'm really confused. So where do you apply? You have to go online, or are there going to be offices throughout so people just walk in and get the paperwork? Or
there's one central office in Sacramento, the call center. We're here to help, CaliforniaExchangePlans.com. We have all the applications, all the application links, all the plans, the premiums to help you. So you can either go through an agency like ourselves, or you can go direct to the Covered California call center.
Yeah, great questions, Pam. What's going to happen from what I'm getting here is you can, like any time you go to work with the government, you can stand in a big long line and probably go through a bunch of different hoops. You can also reach Don at CaliforniaExchangePlans.com. You can call at 877-840-0554, and they have everything to get you set up. So any questions you may have in future, Pam, give him a call or take a look at his website, and they'll get you going. All right, we're going to click over to Alex here. Appreciate the calls, Pam.
Bye-bye.
Thanks, Pam.
Hi, Alex. How are you? Welcome to Talkin' Money. Alex, are you still there? We have Alex from Manteca.
Yes, I am.
Hi, Alex. How are you?
Good. My question is, if I've had insurance with the company and I have an $8,000 deductible, before 2010, I've had this insurance. What is the process for me on that?
Great question. You have what's called grandfather status. You purchased the plan before the ACA was signed into law, and thus you have the option to keep the plan that you're currently on. And I would say you want to look at what your options are before canceling, because that could be a very valuable status, this grandfathering status. So we'll help you look at other options that are available, but certainly having that as an option to fall back on may be something that is very valuable moving forward.
Yes, because my premium right now is like $385 a month, so I would probably be paying over $600 a month if I were to go the other direction, probably.
Possibly, because you have to go to a $2,000 deductible or lower. But the issue would be, are you subsidy eligible, Alex? That's going to be probably the crux of your decision.
Because income, yes. And my income, I'm self-employed. I'm a real estate agent, so that tells you that, I have income, too, that won't qualify.
Yeah. For an individual, are you married with family or are you single, Alex?
No, individual.
So the subsidy dollars are 100% up to $15,000. From $15,000 to $30,000, it's on a sliding downward scale. From $30,000 to $40,000, it goes close to zero, and it hits zero at $42,000 for an individual.
Okay.
What's your age, Alex?
I'm 54.
So the subsidies are based off of age and number of people in the household. Do you have any children at home?
No.
Okay. Can certainly work with you offline. Give me a call at the office. Go to the website. I'll call you on Monday, and we can get you the actual number.
Very good, Alex. Appreciate the call. Don can be reached at CaliforniaExchangePlans.com. His company and employees there will help with any questions. Run through the numbers, whether it's a basic forms from the folks calling in from the state, or there we are with a realtor that's self-employed. I mean, there's so many different pieces of this puzzle here, and we're here to help any way we can. So thanks for calling, Alex. Really appreciate it.
Thank you.
Thanks, Alex.
So we're here. We're getting close to wrapping up here. Don, give us your 5 seconds of fame on what we need to do.
Sure, John. Again, thanks for having me on today. A lot of people have a lot of questions, and that's what we're here. I built our company around treating people the way I wanted to be treated. I help them as if I was helping myself with my information and my knowledge in the insurance business. There's a lot of changes going on. The most changes we've seen since Medicare was adapted in the early 60s. So the biggest change in the health delivery system in our country in over 50 years. A lot of people have questions about subsidies, plan options. What do I do? How does it affect me? Do I have grandfathering status? I can go on and on. We're here to help, John. I appreciate you having, us on the call today. CaliforniaExchangePlans.com is the website. I've written the website to be easily understood. It's an easy read website. It provides a lot of information about these questions we've covered today. And the phone number, obviously, John, you've given it out. It's 877-840-0554.
So I guess one of the questions I have is, it sounds like we don't even know what these costs are going to be. Is that right? Not until we can plug in the information. And is that right, Don?
There's no off-the-shelf product.
Okay.
There's not an off-the-shelf answer for any of the questions. It's all on a per person, per individual, per family, per small group basis, because all of these options are by age, by zip code. There's grandfathering, there's non-grandfathering, there's subsidy eligible. One thing, John, we didn't cover today real quickly is that the plans that are in the individual subsidy market are the exact same plans and the exact same premiums as off the individual subsidy market. So if you don't get a subsidy, there's really no reason to go into the individual subsidy market, because in that market requires an IRS application. So the first step we do is try and plug in some numbers for people with an online calculator to see if they're subsidy eligible. And if they're not, we go right off the subsidy individual market. And at that marketplace, it's a very clean and simple application.
Gotcha.
And basic information.
Well, very good. Thanks again. We're going to be wrapping up here, Don. Thank you very much for all the information. You can be reached at CaliforniaExchangePlans.com. Thank you to Alex Clausen coming in, hanging with me, and drinking with me last night. But anyhow, really appreciate it. Any questions, feel free. You can reach us during the week at Talkin Money Facebook. I can be reached at john@johnfod.com, at Comstock Mortgage, 916-295-5168. Any questions at all, we're here to help. We appreciate it. And Alex, what do you have to close us off with?
Yeah, I want to know how long I have for a power nap every day.
20 minutes is the ideal. Nice. Aloha.